Welcome, fans of the show. There's been a lot of talk lately from both the left and the right of the populist factions in Australia. There was a big stink recently, particularly with the punters' politics sidling up next to the Australia Institute, talking at the Senate inquiry around gas and why don't we tax it more, etc., etc. And I think the big thing that always keeps coming up is everyone points to the Norwegian model, Norway, as having the leading gas tax, oil and gas tax model to create a massive sovereign wealth fund. Big dollars and a whole bunch of extra money for the government, which is kind of interesting because if you've ever been to Norway, everything is incredibly bloody expensive. So it's kind of interesting that the argument here is that if we tax the oil and gas more in Australia, then we'll have cheaper everything in Australia, more services, more everything. But it's in Norway where they do that, it's absolutely not the case. Everything is ridiculously expensive. Either way, I don't even know whether the Norway model is worthwhile or not. So today we're going to read about the Norway model. What does it mean? How do they tax it? And would it work here? Who knows? Interestingly enough, Friendly Geordies has also been putting out a lot of, well, not a lot, I think he's put out 2 videos so far pretty much on this gas tax stuff now. And, brought up an interesting point, which was if you decide to introduce a tariff on existing projects, it is a bad signal to the market that the Australian government can just change its mind whenever the bloody hell it wants. And that half of the argument of why the American tariffs are so shit is because you lose confidence from the business community that you're a good place to operate. 100% agree with that take. That's a fair and reasonable take. That's part of why businesses and companies like to operate internationally in certain areas and not others, is because there is a reliability of the rule of law. And I think that's something we should be very proud of here, that we're not just screwing people over after a handshake has been made. So let's get on with the show and start reading, because this hour is going to go very quickly, and I believe it's going to be very dense. Some of this stuff, there's a lot of information just from what I saw on quick glance. So, Norway, our friends up north. Very cool, very nice, very fun little piece of strip of land. And so the main production happens offshore in this North Sea area between Scotland and Norway, is where all the oil and gas is. I believe it does come up quite high. I know Trondheim is an oil and gas town. I know Stavanger is an oil and gas town. There's a lot of interesting stuff, and I think salmon tends to be further up north. So big exports, oil and gas and salmon. And it's beautiful, is my understanding from what I've seen of it. Let's get, how do I go back? Back. Wow, so pretty. Wide, sweeping fjords, steep, snow-covered mountains, pristine lakes. Aurora Borealis. It's lovely. Very nice. Lovely. Righto. So, Australia Institute and Norway. So we are here at Norsk Petroleum, Norwegian Petroleum. Oh, I want to get a bit of, I want to have a look at this interactive map. Are you going to load for me? You're not going to load. I want to explore the shelf. I want to let me explore the shelf. Okay, I need to know. I gotta know where these fields are. This will do it. Okay. Oh shit. This looks like a list of operators or operated fields. Maybe, yeah. Stat oil, there's a lot of stat oil. Total. Righto. So this is down the southern end. So these look like leases, probably production leases. Maybe some exploration leases, but it's clustered towards the North Sea, towards Scotland. And they come up the coast. There's our friend Trondheim, a whole bunch of fields off Trondheim. Heading all the way up to, oh, they've even gone some further north, but Sandnessjøen, couple up. Couldn't be onshore, is it? No. Okay, inside. They even have a few production or exploration. This must be production because this looks like a pipeline. Couple of fields up way into the Arctic, which is interesting. Fuck, this must be miserable to drill in. Barents Sea, fuck that, bro. Open for petroleum activity. Open with special schemes. Awards in predefined areas. Okay. So they've got three, what you would say three main areas. In the North Sea, Norwegian Sea, and the Barents Sea. Righto. Something else that's on my mind that I need to figure out is what's the difference in oil and gas reserves? Here we go. Norway has proven reserves of over 10 billion barrels of oil, making it the largest oil producer in Western Europe. Australia's proven reserves are substantially lower at 2 to 3 billion barrels. I think it's less than that. I think we're in the millions of barrels at the moment. Or it's like up 1 billion barrels. It's not this much. Remember we went through the numbers and it was basically if we produced 1 million barrels a day for 1 million barrels a day, we would run out of oil in 5 years. That's about 1 billion barrels. No, it's just over. Yeah, 2. So almost 5 times as much oil as us. Australia holds roughly double the proven natural gas reserves of Norway. Okay, so we've got double the gas. Norway relies predominantly on offshore oil rigs and exports its gas via a vast underwater network. Australia's sector is heavily LNG dominant, requiring costly liquefaction plants to ship gas across the Asia-Pacific region. This one's going to be critical, right? Pipelines are cheap, comparatively. And then this is all stuff that we're going to read now because this is all coming from Australia Institute and other parliamentary sources in Australia, but I want to get to the horse's mouth, hear it for myself. That framework, holy shit. Facts and figures, remaining reserves. This is in millions of cubic meters. Freaking goddamn metric system. I'm not used to the metric system for oil and gas stuff, so we will let that. We're gonna just let that slide. Fundamental principles. The regulatory framework for petroleum activities has been designed to give the best possible balance between companies and the authorities' interests. This is achieved, among other things, through taxation policy, through the Petroleum Act, and through the authorities' oversight of resource management. The overall objective of Norway's petroleum policy has always been to provide a framework for the profitable production of oil and gas long term. It has also been considered important to ensure that as large as possible share of the value creation accrued to the state so that it can benefit society as a whole. Oil and gas activities must take place within a sound, healthy, safe, and working environment. Okay, that's normal stuff. This is the mission statement that they want the bulk of the value to go to the state. Norway has established a division of roles and responsibilities between state and business sector that provides a good basis for achieving the goals of Norway's petroleum policy. The authorities regulate the sector by setting a clear and predictable overall framework. The oil companies and other actors in the industry are responsible for operational activities. Because commercial companies are responsible for exploration and oil, it is essential to give them the right incentives. The decisions that are best for companies must also be beneficial to society. Okay, it happens through the Act. Okay, to ensure that value creation benefits Norwegian society to the greatest possible extent, the tax rate for oil and gas companies is 78%. The petroleum taxation system is based on ordinary taxation, currently 22%, but an additional special tax is levied. One key consideration in designing the petroleum taxation system was to ensure that incentives for companies to make investments were maintained. Projects that are profitable for society should also be profitable for the oil companies. It is therefore the companies that are taxed, not the oil and gas fields. The companies are entitled to deduct all relevant costs from the tax basis. Deductions for investments, depreciation, are designed to prevent the high tax rate from reducing the willingness of companies to invest on the Norwegian shelf. In 2022, the petroleum taxation was changed to a cash flow-based system in the special tax regime, where investments were immediately deductible. To ensure that companies are treated equally regardless of whether or not they are liable to pay tax, there is a system whereby companies can claim reimbursement of the tax value of any losses made in the special tax regime. To ensure that companies are treated equally regardless of whether or not they are liable to pay tax. There is a system whereby companies can claim reimbursement of the tax value of any losses made in the special tax regime, 71%. Okay. Wow. Okay. Immediately I'm getting a picture of a company tax of 78% for oil and gas. There is no tax on the gas. This is what this tells me. There is no tax on the gas in Norway. Right? It is therefore the companies that are taxed, not the oil and gas fields. Where am I going to find this? So this is from Melbourne Institute. We know that the Albanese government will very likely introduce an extra levy imposed on gas producers' high profits. The Prime Minister's Department has requested Treasury modelling of additional levies on gas companies in response to the Iran crisis that is driving up the energy costs for Australians. The department is reported as saying that energy producers should not benefit from high international prices at the expense of domestic customers. Where is my arbitrage? Holy fuck. That's life, man. This is the swings and roundabouts of the free market. Jesus Christ. Precisely. There can be no going back now from such a statement. Fuck. But this is also a time for longer-term thinking. We cannot have a temporary extra tax. We must deal with Australia's chronic undertaxing of those utilising the gas resources that belong to all Australians. Indeed, there will never be a better time for the federal government to adopt a fair share levy as set out by Superpower Institute, which I chair. Gee, thanks for that, Serena. To ensure gas companies pay their fair share cost of levies, the levy is based on tax based on Norway and the UK. Other fossil fuels typically share between 75 and 90% of the fuel profits. Other major fossil fuel exporting countries typically share between 75 and 90% of fuel profits. Australia shares only 27%. We saw Chevron pays about 29% in tax. Through a combination of corporate tax, royalties, blah blah blah, with profit defined in cash flow terms as a norm, Australia shares even less, 18%. But we're reading that Norway allows deductibles, but okay. So this way, this isn't even the Australian Institute, this is some other Norway Institute. Okay, so what these guys are talking or calling for, the 25% tax on gas exports, is nothing like the Norway system so far. Okay. Let's have a look. Green petroleum. So this is all pretty normal stuff, right? The act is going to outline how exploration leases work, how you transition to a production lease. Licensees make a discovery and wish to continue work under the license. After they have fulfilled their work obligation, they are entitled to an extension period for the license. The duration of the extension, blah blah blah, in most cases 30 years. So this is about what their obligations are in terms of planning and execution and approvals. Station. No, we want to get to that money. State organization. How does this work? To ensure that the petroleum industry takes important public interests into account and that resources are utilized as effectively as possible, the petroleum industry must be well organized with clearly defined areas of responsibility. The Storting of the Norwegian Parliament sets the framework for petroleum activities through legislation. The Storting also supervises the government and public administration, even though the composition of the Storting varies over time. So this is just a democratically elected government. So it's all talking about petroleum industry. They fall within Ministry of Energy. Cool. The Ministry of Energy is responsible for resource management and the petroleum sector as a whole. It is also responsible for the working environment and safety and emergency preparedness. Then there's some sub-directorate. So it's just the structure of how the government works. Here we go. State ownership. This is the other thing people always talk about, right? They keep saying Norway, the government owns a share of everything. So let's find out. Petoro is a wholly state-owned company that manages the commercial aspects of the state's direct financial interests through the SDFI. The Norwegian state participates directly in petroleum activities on the Norwegian continental shelf. Petoro is the licensee for the state's share of production licenses and ownership in fields and pipelines on the Norwegian shelf and associated onshore facilities. Petoro's main objective in managing the state's direct financial interest shares in production licenses and fields is to create the highest possible value and maximize state revenues from the portfolio. Petoro is managing the state's ownership in key parts of the upstream gas infrastructure. Shall emphasize that the infrastructure is a means for achieving the highest possible profitability from, and thereby sound management of, petroleum resources on the Norwegian continental shelf. See here for the principles governing Petoro's management of central gas infrastructure. Petoro was established in 2001 and has around 80 employees. Is that all? The Ministry of Trade, Industry and Fisheries is responsible for managing the state's ownership of Petoro. Now, how do I translate this? Yeah, let's go. So this is a legislated governmental company. In accordance with the Act, Petoro shall do these things. By central gas infrastructure is meant Gasled, Nyhammer and Polarled. The Ministry of Energy may also determine that other gas infrastructure should also be considered central gas, covered by the principle. I want to know what Petoro does. Petoro. Sure. No, we want. Yeah, English. There we go. Toro, driving force on the Norwegian continental shelf. Our primary task is to create the greatest possible value. Okay, how do you do that? What do you do? I don't even know what you. How do I know what you do? Main tasks. Organization. Toro's mandate is, on behalf of the state and the state's expense and risk, to be responsible for safeguarding the commercial interests related to the state's direct financial petroleum activities on the Norwegian continental. Okay, so it's an overarching body that's managing the risk and expense for interests in companies. The directive of the company is to create the greatest possible value. Petoro has four main responsibilities: managing the state's direct ownership interest in licenses, where the state at any time holds such interest, marketing, monitoring Equinor's marketing of petroleum produced, the state's direct ownership interest including marketing, financial management, including accounting for the state's direct ownership, managing state ownership of central gas. So this is license follow-up. A key part of securing value for the state is to achieve optimal recovery of resources within each production license, increase value creation, and ensure that the state receives rightful share of production revenues and costs. Petoro achieves this through active participation in production licenses in all phases from exploration to development and operation. Work within a production license takes place within the framework of a formal joint operating agreement between the licensees. The agreement regulates how the parties shall cooperate. Joint operating agreements on the Norwegian continental are standardized and contain clear rules governing roles, responsibilities, and decision-making processes. Governance. Operations within each production license are governed from a fixed committee structure. The highest level is the management committee, where all license partners are represented. Below the management committee are technical and commercial committees. These subcommittees thoroughly assess professional, technical, and commercial matters. Their recommendations are then submitted to the management committee. Wow. The operator is responsible for day-to-day operations and for implementing the decisions that are made. The relationship between the management committee and the operator can be compared to that between a board of directors and executive management in a company. At the same time, partners in a license participate far more actively in technical and commercial assessments than is normally the case for board members in a company. Holy shit. Petoro cooperates with gas infrastructure. Petoro cooperates with Gasco, the operator of the transport system, as well as with infrastructure users and the authorities. Holy shit, talk about big government. This is big government. Holy shit. Together we work to ensure that the system functions efficiently today and is adapted to future needs. The system is the world's largest offshore gas transmission system and delivers energy volumes to Europe equivalent to approximately 9 times Norway's hydropower production. Overall, Norway supplies around 30% of Europe's demand. This is why they're getting rich as fuck, bro. Gas infrastructure has high regularity and has developed over more than 50 years in line with the field developments in the Norwegian shelf. And they're doing a bunch of marketing and then financial management, budgets and forecasts. Okay, holy shit. So they are incredibly involved. Board of directors. Arne Sigve. Jesus, they all look incredibly white and European. Holy shit, yes, they look Norwegian as fuck. Okie dokie. Oh. Crikey. Petro AS management. Yeah, interesting. Righto. Equinor ASA, so former Stat Oil. I'm guessing this is state, the state-run oil. Equinor is an international energy company with about 21,000 employees in over 30 countries. Its main objectives are oil and gas production, and the company is operator for about 70% of all oil and gas production on the Norwegian shelf. The company was established in 1972 and is listed on the Oslo and New York stock exchanges. Equinor's board is responsible for commercial development of the company. The Norwegian state owns 67% of the shares in the company, and the Ministry of Trade, Industry and Fisheries is responsible for managing the state's ownership interest. The objective of state ownership of Equinor is to maintain a knowledge-based, high-technology company that has its main base in Norway. Equinor is run on a commercial basis. Very, very interesting. Gasco AS. Gasco was established in 2001 and is a wholly owned state company. Gasco does not make a profit or a loss from its own operations. Gasco is the neutral and independent operator of the gas transport system and is responsible for operating the infrastructure on behalf of the owners. The Ministry of Energy manages the state's ownership interest in Gasco. What do you mean that the state's owned? It's wholly owned by the state, so it manages 100% of the interest. What the fuck are we talking about here? This is another interesting thing here, right? Like, it's profitable. This makes your gas lease, your production lease, more profitable as a company because there is a not-for-profit distribution system inside Norway. Gasco does not make a profit or a loss from its own operations. It's operating at a neutral cost, right? Like, that's as cheap as, like, if you're operating without a profit, it's as cheap as it's going to get in terms of transport. Meanwhile, in Australia, look, not saying it can't be done, but it definitely looks like a shitload of government intervention is required to make it work. But then, are we going to then operate the LNG trains at a loss? I suppose we could. Are we then going to operate the ships to and from our customers at a loss? I mean, probably could. But that's definitely something, right? Like, it's, do you want to? Is that something that we need? Anyway, this is certainly building the picture for us. Okay. Gasco, we move energy so others can move forward. Vacancies. Oh, here we go. E&I techs. Technical leads. Strategic people. Very cool. Who are we? Pipelines and platforms, processing plants, receiving terminals. They're even doing all the offshore shit, right? The Norwegian gas, what we do. Transport system. My god. Fran pipe. They even do a pipeline down to France. Asgard transport. Europipe. Europipe 2. Fran pipe. Kiowa pipe, Carlton pipe, Norna gas transport. Wow, cool. Nor pipe. Another one into Europe. These must be platforms, right? There's serpents in the ocean. Z pipe, I like that. And Z pipe, nice. Vestalev. Vestalev. So taking moving from, is that Scotland? Yeah. That pipe. Processing plant. Receiving so they're operating these receiving terminals? Is that what they're saying? Offshore facilities. Yeah, they've got a bunch of offshore terminals. My god. Tariffs in areas. No. No. Okay. This is their pricing. Metric tons, cubic meters. And it's in the Norwegian kronas, right? Right, so they're charging, obviously they're charging for it. You'd have to, for maintenance, etc. So the government is operating the transport system at break even so that they can encourage businesses to invest in oil and gas in Norway, yet the government owns 67% of a company that operates 70% of the oil fields. This is socialism. Although it seems to be working for them in a weird way. I'm starting to get the mental model though, which is I feel like there's a few critical elements that are working in their favor. Namely, oil is worth more than gas. They've got 5 times the oil that we do. And they have this ridiculous European market that they can just hook a pipe up to, which is relatively cost effective compared to LNG plants, which is what we have. But we're getting there. The more we read, the clearer the picture becomes. Alright. Let's have a look at production exports. Exports. Put this in normal barrels. Killing me. Okay. Oh, nice. We have percent of total exports of goods. More than 120%. More than 100%. So, share of total exports. Okay, condensate natural gas. So this is how's that high contract? This is high contract anyway. 100 billion. How is it 100 billion? A 100 billion Norwegian krone is approximately 150 billion Australian dollars. Australia is exporting $64 billion a year value of LNG. So we literally just cannot move it offshore fast enough, would be my guess. Like, we can't move it offshore at the same rate as these guys, because they've got big ass fucking pipelines. We have LNG. Whereas this is the cool move. This is the cool dude move. If we want to be, why did it go? Why did it do that? How do I not make it 3D? I don't like maps in 3D in my life. How do I make no 3D? Oh yeah. Here's the cool dude move, right? This is super cool. Pipeline through Timor-Leste, because they got some offshore too, then up into Indonesia, or maybe just run it through the Java Sea into Singapore, and then maybe run another one up onto Ho Chi Minh City or something. No, where is it? How long? Where is it? Into Ha Long Bay and get the gas piped. Get some gas, or like it's offshore here. Big fucking pipelines all the way. Well, the problem is these distances are so short compared to what we have, because they're. Is it? Well, it's not. It's not a projection, is it? But it kind of is. But the distance from what's the distance from Stavanger to 500 kilometers? Right. How far is it from? What's the Singapore? 2,500. 3,000 kilometers. Yeah, because it's the projection. Right? 500 kilometers doesn't get me shit. Doesn't even get me probably to Timor-Leste from Darwin. No, it doesn't. The pipelines aren't very practical where we are, which is a shame. Because if we could get it to Singapore, my god, possibilities, right? At that point, yeah, lots of interesting possibilities. I mean, not easy. We never said it was going to be easy. But everyone is on a little piece, right? You get the main pipeline going into China, and everyone takes off their little piece. So it makes up 57% of the total value of Norway's export goods. Now, if the value was worth, yeah, no, don't worry, ignore me. You can't do a straight calculation of what went into the government's coffers by multiplying the value by 0.78 or whatever it is, because everyone's reducing their taxable burden, right? They're claiming tax expenses to reduce their tax. But billions, share of total exports. So the numbers, export value of blah, 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 blah. Oh, I see. Oh, I see. So, holy shit, when was this? 21, 20, so that's 2025. That's the 1,000 billion krones. 24, 23, 2022. My god. Look at that. So that's over 300 billion Australian dollars. Right? Yeah. In 1 year. Keeping in mind our budget is $833 billion. So it would be nice to see a few of these billions. Norwegian oil production reached a peak in 2001 when total liquid production, including NGL and non-gas, what is it? Non-gas liquid, I don't know. NGL and condensate was 3.4 million barrels of oil equivalents a day, and then declined by approximately 5% on a yearly average until 2011. The production has since been more stable. In 2025, production of oil liquids was around 2 million barrels per day, and Norway now supplies about 2% of global oil consumption. Keeping in mind, Australia doesn't even produce 1 million barrels a day, and it can't, because we don't have that oil available to us in the type of offshore high production rates that Norway has for oil. We produce, I think, 200 to 300,000 barrels of oil a day. In 2025, Norway exported around 1.5 million barrels per day of crude directly to other countries, and about 0.14 million barrels per day was delivered to onshore facilities in Norway. Crude oil purchases are mainly refineries which process the oil to produce fuel and other oil products. Ooh. Very cool. So they're still getting quite a lot of their energy consumption from oil and gas. Yep. I think it's fine. They're 12th on the list. Oh, good for them. Oh my god, 19 million barrels a day. Holy shit. Woo! Big money. Yeah. Natural gas. Wow. Big pipeline network. The value of Norwegian gas exports in 2025 were higher than the value of the Norwegian exports. As a result of high gas production and relatively high prices, domestic consumption of gas in Norway is very low, and nearly all the gas is exported. An extensive network of subsea pipelines links Norway's offshore gas fields and onshore terminals directly to recipients countries in Europe. The total length of the Norwegian gas pipeline is about 8,800 kilometers. Let's hope for us yet. Let's hope for us yet. We only need, if we can, let's hope for us yet. Okay. Hear me out. Listen. Pipeline to, look, let's be ambitious. We're going to create a new terminal here, 2,000 kilometers to the other side of Jakarta. Then we take it cross land and then up to I don't know, Brunei. No, we're gonna go all in with our Indonesian brothers. We're gonna take it now to Lampung, and then we go across land, and then up into Singapore rules, and then do we want to deal with Malaysia, or do we want to just go straight up to Vietnam? Let's go Vietnam. We only need 4,000 kilometers of pipeline. We can do it. And then Brunei can, and then once we're in Vietnam, it's easy. It's happy days. We just go onshore all the way up into Shenzhen, and then Fujian, and then of course, Zhejiang, Jiangsu, Shandong, Beijing, and then the golden boys and girls. And then if we want, it's only another few thousand kilometers to Japan, and we can be buds with Japan. Like if I go from Shanghai to, we can operate it all. We can just have it government operated. Fukuoka. It's only 800 kilometers, maybe 1,000 kilometers. Easy. That doesn't even come close to 8,800 kilometers on the subsea pipeline, right? Which is roughly the distance from Oslo to Bangkok. See? If we can get from Oslo to Bangkok, we can certainly get from like Northwest Shelf to Bangkok. No dramas. See the article about pipeline system. In addition, liquefied natural gas is shipped out of the Struvert field off Hammerfest on LNG carriers. Approximately 5% of Norwegian gas is exports in LNG. 5%. So, where's our handy little chart? 5%. So, 25 billion kroner. 25. What am I looking at here? 3. It's millions. That's billions. So it's only about $4 billion worth that they're doing via LNG terminal. Whereas we're doing 53 billion, 64 billion. We're doing a hell of a lot for the terminal. Alright. So they're doing a lot of, exporting a lot. Government's revenues. Alright, I want to see this. Don't have much time. When the first production licenses were awarded in the mid-60s, hardly anyone realized that the industry would mean for the American economy. 50 years later, 50 years. Hang on a second. Checking. Right. 50 years later, it is more important than ever. The industry plays a vital role in the Norwegian economy Yeah, no shit, it's 53% of the economy. And the financing of the Norwegian welfare state. The oil and gas sector is Norway's largest, measured in terms of value added, government revenues, investments, and export value. Long-term perspective from the management of government's petroleum revenues ensures that they benefit Norwegian society as a whole, and that future generations will benefit from Norway's petroleum wealth. This has been a key principle in developing the financial and legal framework of the sector. Since production started on the continental shelf in the early 70s, petroleum activities have contributed to over 28 billion in current Norway kroner to Norway's GDP. This does not include related services and supply industries. Yet so far only about half of the estimated recoverable resources on the Norwegian shelf have been produced and sold. Share of the state's revenues, 30%. Share of total investments, 21%. Share of total exports, 47%. One of the overall principles of Norway's management of its petroleum resources is that exploration, development, and production must result in maximum value creation for society, and that revenues must accrue to the Norwegian state and thus benefit society as a whole. The main reason for this is the extraordinary returns that can be obtained by producing petroleum resources. Since these resources belong to society as a whole, the Norwegian state secures a large share of the value creation through taxation and the system known as the state's direct financial interest in the petroleum industry. The expected net government cash flow from petroleum activities, taxes, 373.8 billion, 36 environmental taxes and area fees, net cash flow from SDFI, Equinor dividend, net government cash flow, 685.6. Zero. If I remove how many zeros is it? That's a million, that's 1,000, that's a million, that's a billion? So it's $103 billion. So in 1 year, the taxes they're receiving from their oil and gas industry is $103 billion. Okay, Australia. According to industry reporting, the sector delivered a record $21 billion, $21.9 billion. Okay. The total payment from tax revenues and fees from petroleum activities are estimated to that amount. Okay, the total payment from tax revenues and fees from petroleum activities are estimated. Oh yeah, we saw it up there. Okay, yeah. The net cash flow from direct ownership in fields through the system is estimated as such. The government has additional income from Equinor. It feels weird to talk about the government taking a profit cash flow income from owning fields. It just feels weird. Just feels super weird. It looks like a new structure may have come in around somewhere. Oh yeah, 2022 war in Ukraine, right? They shut off Russian gas. Whoops. The war was good for Norway. Share of GDP, share of investments. Obviously, when they say share of investments, they're talking about government investments, right? The government has a fucking share portfolio. Share of exports, share of state revenue. The petroleum taxation system is based on the rules for ordinary company taxation and are set out in the Petroleum Taxation Act. Because of their extraordinary returns on production of petroleum resource, the oil companies are subject to an additional special tax. Current ordinary company tax rate is 22%. In Australia, it's 30%. To ensure a neutral taxation system, paid company tax is written off when calculating the special tax base. This entails a special tax rate of 71.8% in order to maintain a combined marginal tax rate of 78%. In 2026, Norway's tax, okay, yes, we read that. Special tax rate of 71.8% in order to maintain a combined marginal tax rate of 78%. How does that work? I think that tax system for more information. Yes, please. Taxation system, yeah, we read that. Into a neutral taxation, the company paid is written off when calculating neutral tax system. The petroleum taxation system is intended to be neutral, so that an investment project that is profitable, yeah, we read this. Special. To ensure a neutral tax system, only the company's net profit is taxable. Yes. Okay. Petroleum taxation system is intended to be neutral so that an investment project that is profitable for an investor before tax is also profitable after tax. Yes. This ensures substantial revenues for the Norwegian society and at the same time encourages companies to carry out all profitable projects. To ensure a neutral tax system, only the company's net profit is taxable, and the losses may be carried forward in the company tax. Yes, special tax value of losses is reimbursed at the tax settlement the year after it's accrued. Neutral properties in the tax system are also important in defining investment-based tax deductions. Alright, this is the end for tonight. We need to come back to this another time on Thursday. We're going to read more about the Norway tax system. I want to see an example of what this looks like as well in like practice. How does this all work? I want to see someone's books. I want to see Statoil's books. Okay. Goodbye, good evening, and good night. See you on Thursday.